Hello everyone, my name is Khan and welcome to the new video. In this video we are going to learn that how we can identify order flow and how we can trade it in a higher time frame, in a lower time frame. So this is a very important video regarding order flow because a lot of members are struggling to identifying the order flow. What is the process to apply in an order flow entry module when market momentum is a bullish and bearish doesn't matter. Main thing to identify the structure and identify a specific area which is not unmitigated. Okay, so you have to identify unmitigated order flow and then wait for mitigation, and then also you can use lower time frame confirmation. Okay, so first of all, let me show you three drawings, then you can understand that what I'm trying to explain here, and then I will explain on real chart, then you can understand more better. And okay, so this is our bullish structure here. As you know, market momentum creating higher high after taking out the inducement and market continue pushing upside. So in this case, if you are looking here to identify order flow, so what is order flow? Order flow is a specific area, the last buying momentum before the sell and last selling momentum before the buy. That's called order flow. In this case, you can see market momentum structure is a bullish. So you have to identify last selling move before the buy, which is unmitigated. Those act like a unmitigated order flow. So in this case, this is our bottom point here. The last selling move is here. Okay, so if market break this one and push downside and mitigate by a valid pullback, so this point become our mitigated order flow. Okay, it means there is no need to use in a future because this one is already mitigate here. You have to use fresh order flow. Okay, so this one is already mitigate here. The last selling move before the buy is here. Okay, so this one is our mitigated order flow is here. Again, what happened here? Market again go higher and take it again pull back here. And what happened here? Same thing happened here. Market take a last selling move before the buy, market take a pullback, and again this order flow is already mitigated here. Again, what happened here in the next step? The last selling move before the buy is here. So this one is our unmitigated order flow. Market create another pullback but not able to mitigate this one, and this one is called unmitigated order flow. Okay, so in this case, how we can deal? You have to wait for it to break the previous structure, and after break the previous structure, you have to wait for taking out the inducement, and after taking out the inducement, you have to identify where is our unmitigated order flow. Okay, sometime you will see multiple order flow like 2, 3 and 4. Okay, but generally you have to focus on decisional and extreme order flow, which can be applicable on after taking out the inducement and also applicable on extreme point. So in this scenario, same thing happen here. This is our unmitigated order flow. Market take another pullback here, and this point become our inducement. Why this is inducement? Because market taken out the break the previous structure, close above it, become a valid break of structure and taken out inducement, and after inducement you have to wait for it to mitigate unmitigated order flow. So in this leg you have only one unmitigated order flow, price type here, and you can switch here in a lower time frame. For example, this one is your higher time frame structure like 4-hour time frame. Okay, and price type on your higher time frame 4-hour POI order flow. Then you have to switch here in a 15-minute structure, wait for 15-minute chalk flip, and then you can buy here on order flow. You don't need to buy here on order block. Why? Because this one is our order flow entry module here, right? So this one is your order flow. Simply price type here, and then also you have to switch here in a 15-minute order flow like price taken out and buy here on this order flow, not order block. Why? Because you are buying or selling based on order flow, not order block. If price type on order block here, right, and create reaction, and then you have to follow the order block, not order flow. Okay, so simply if price type on order flow in a higher time frame, then also you have to use in a lower time frame similar thing, 1 minute or 5 minute or 15 minute. It depends on you which time frame you are following. You have to use same lower time frame order flow for the entry, for the buy and sell, right? So in this case, this point become our unmitigated order flow, price type here, and you have to wait for a chalk flip, and then you can buy here and the previous high as a target, right? So this one is a process to identify unmitigated order flow and wait for reaction, and then you can buy or sell, right? So this one is a possible scenario based on order flow. The next attempt, what happened here? Market again break the previous high, and in this case again you have to wait for it to find where is our unmitigated order flow in this case. Look at this one. The last selling move before the buy is here, right, which is already mitigated by the pullback. It means this pullback is not valid, this order flow is not valid here, and this one is also mitigated by this pullback, and this one is already mitigated here. It means all order flow is mitigated here, right? And this one is our next unmitigated order flow is here. In this case, what happened here? This point is not mitigated, but price go higher. Why? Look at this one. This point become our inducement right here. Okay. So generally price taken out the inducement and then mitigate your unmitigated order flow, and then we can buy or sell, right? But price not tap on your order flow or order block. But how you can deal in this situation? Simply you can deal in a two scenario. First one is here. If price sweep the inducement here, right, and create any kind of inducement here, any kind of order flow here, right, then you can buy here. Okay, let me show you exactly what I'm trying to here. This one is our internal structure, sweep and go higher, and this is our order flow, price type here, and then you can buy here at this point. You don't need to wait for mitigation this order block or order flow, because the inducement taken out. But this is applicable when price sweep the liquidity, sweep the inducement. But if price not sweep the inducement, and then you have to wait for it to mitigate this order flow, taken out inducement and then go higher, and this is our order flow. This is entry, and put the stop loss just above it. You have to put the stop loss based on order flow, not order block. If you are buying or selling based on order flow, then you have to follow the order flow rule, right? Okay, now let me show you on chart, then you can understand what I'm trying to explain here. This will be helpful for you. Okay, so this is our gold chart in a 4-hour time frame. Let me show you 3 higher time frame to lower time frame, that how we can refine, and also you can use liquidity in a higher time frame, and also what happened in a lower time frame. So this is our 4-hour time frame. If I'm going to show you in a higher time frame to lower time frame, so let me show you, start from the weekly time frame perspective, because this one is our higher time frame picture. In a higher time frame picture, market looks bullish, everything is a bullish. But look at this one. This was our previous all-time high, which was created here, and market grabbed the liquidity. And when market grab the liquidity, it means market are looking for the downside move here. So this one is happen here, market taken out the liquidity, and again, what are you looking here? We are looking here for the sell. When market taken out the previous high or low as an external liquidity, then we are looking for the sell. Same thing happen here, the previous high taken out at this point. Look at this one, this side over here, right? So if price taken out this one, then definitely we can sell at this point. And also same thing happen here, market taken out this low, and this shadow act like a POI. It means if market taken out the previous high, then definitely we can sell till the first pullback as a target. So this is a possible scenario in a higher time frame in a gold based on weekly time frame perspective. Okay, so in this case, if market create here anything here like in any kind of bearish indication, definitely we can sell till this low, because in a higher time frame market momentum was bullish, but market taken out the external liquidity. When market taken out the external liquidity, then we can sell or buy based on SCOB, and also you can use lower time frame chalk flip for the buy and sell to follow the order flow and order block and imbalance as well as here. So in this case, market taken out the liquidity, this shadow grab the liquidity. It means this shadow act like a POI, because this shadow grab the liquidity, and we can use for the POI, and you have to wait for it to lower time frame for the confirmation. This is a weekly time frame. Obviously you need at least 4 hours for chalk and flip for the buy and sell. And again, if you want a more refinement, then those 4 hours you can refine into 15 minutes. Okay, I will show you everything step by step. So this is our weekly time frame, liquidity sweep here, and this shadow act like a POI, market type here. If market type here, definitely we can sell here, right here. Okay, so this one is our POI, which is already mitigated here, and if market mitigate here, then definitely you can switch here in a lower time frame for the sell. This is a weekly time frame. I'm going to switch here in a 4 hour time frame, right? Because 4 hour time frame is a lower time frame to follow the 4 hour and weekly time frame. So market mitigate here at this point. It means this one is a liquidity in a weekly time frame, which is already grabbed here, and price type here. And now after break the previous like mitigation, this one, and create any kind of chalk or flip, definitely we can sell here. Look at this one. This picture is here very clearly. This is our mitigation, And when price mitigate the extreme high probability POI, which is grab the liquidity, you have to wait for it chalk. Where is chalk in this case? The first pullback is called chalk. So in this case, this one is our previous pullback here. After taking out this one, definitely we can mark this as our chalk. So after chalk, you have to wait for it to take out the inducement, and then we can sell here. Simply, this is based on order flow. I'm just showing you through order flow. This is not about order block or imbalance, anything. You can apply all the thing, but this video all about order flow. That's why I'm showing only order flow entry module here. Okay. So if market break this one, and then again you have to wait for it to lower time frame chalk and flip, and then inducement, and then you can sell. So price type a higher time frame POI, create chalk, and again we need inducement. So in this case, where is our inducement? This high is our inducement. If market taken out this one, then we can sell. But market not taken out this one, and again push downside and create new inducement at this point. Same thing happen here. Market again push downside, and again what are you looking here? We are looking here for sell, right? So same thing happen here. Market not taken out this inducement and again push downside, and again market create inducement at this point. So once market taken out this inducement, you have to wait for it to mitigation the order flow or order block, and then we can sell, right? So this is inducement, okay? Because create chalk, taken out the inducement, and you have to wait for it, the unmitigated order block or POI. So this is our hidden supply zone is here. Why this is hidden supply zone? Because the previous high and this high act like a hidden supply, because just above it there is no unmitigated order flow is here. Everything is mitigated here. So in this case, we use generally the hidden supply, because this move act like a, this move grab the liquidity. That's why this point become our high probability zone for the sell, right? If market tap here, and then again you can switch here in a lower time frame. This is a 4-hour time frame. You can switch here in a 15-minute time frame to see exactly if market create here any kind of like 15-minute chalk flip, then you can sell here, right? So same thing happen here again, and this is a refinement over refinement, like weekly, 4-hour and 15-minute time frame, right? And you can apply any time frame. This is not about this time frame. You can apply directly 4-hour and 15-minute. And if you are willing to trade only 15-minute and 1 minute, then you can use, you don't need to use these time frame. I'm just showing you because a lot of members trade different time frame. That's why everything will be clear in a higher time frame to lower time frame. Okay, but the main thing is to identifying the liquidity, wait for liquidity grab, and also wait for price mitigation after taking out the inducement, and then you can buy or sell, right? As I mentioned in a previous diagram in a starting, that if market not able to mitigate your order flow or order block, price just sweep the inducement, and then market create any kind of reversal order block, order flow, then you can also buy or sell, right? So same thing applicable here. Market create chalk, taken out the inducement, tap on this, and you have to switch here in a 15-minute time frame, because this is our 4-hour time frame POI. Okay, if market create here any kind of POI, then we can sell, otherwise no. Okay, let me show you here in a 15-minute time frame. Okay, so this is our higher time frame, hidden supply zone is here, price type here, and now you have to wait for it to taken out the chalk in a lower time frame, in a 15-minute time frame, right? So the first pullback is a broken here, and this one is a called chalk, and once market create chalk, and definitely we are looking here for sell after taking out the inducement. So same thing happen here, price create chalk, and now you have to wait for it to taken out the inducement. So inducement is here. In this scenario, market create chalk, and after chalk you have to wait for it to taken out the inducement, and after taking out the inducement, simply you can buy or sell on this unmitigated order block, because order flow is already mitigated here. So in this case, only unmitigated order block is available here, so simply you can sell here. If all order flow is mitigated, then you have to follow the order flow. If order flow is available, then you have to focus on order flow, not order block. Okay, order flow is a primary, and order block is a part of the order flow. So same thing happen here. This is applicable entry here. Again, what happened here? Market break the previous low and create another break of structure here. And after break of structure, again, what are you looking here? We are looking here for sell, because this is a break of structure, taken out the inducement at this point. And after taking out the inducement, what are you looking here? We are looking here for sell on order flow. So in this case, where is our unmitigated order flow? Look at this one. Start from top of the move. This is our last buying momentum before the sell, which is already mitigated here, right? And this one is already mitigated by this pullback, and this one is already mitigated. This one is also mitigated, and only one unmitigated order flow is here, when we can expect after this taken out the inducement, we can expect that if price tap here, then definitely we can sell here, but price not tap here. Okay, so you have to wait for it to create new structure, then we can sell, otherwise no, right? All order flow is metered here, only one unmetered order flow is here. If price tap here, then definitely we can sell, otherwise no. Again market push downside, break the new low and create new break of structure. Again, what are you looking here? We are looking here for sell after taking out the inducement. Look at this picture here. This is our inducement. After break of structure, first pullback is called inducement. After inducement, what are you looking here? We are looking here for the sell on the last buying momentum before the sell. Why? Because market momentum is a bearish and everyone looking here for the sell. So this is our previous low as a target at this point right here. Okay, this is our target. This one is our inducement, and after taking out the inducement, you have to identify order flow. The last buying momentum before the sell is here. Press taking out the inducement, mitigation this point, and we can again sell at this point right here. But you have to put the stop loss just based on order flow, right? In this case, you will get a very small risk reward, almost 1.35 hour, right? And in this case, this entry is a missed here, and this entry will be applicable here at this point, and you have to put the stop loss just over the high right here, and this is our target. Okay, again what happened here, the previous low is a broken, again create a break of structure, and now again what are you looking here? We are looking here, wait for inducement which is already taken out, and now you have to wait for it to identify where is our unmitigated order flow. Order flow, the last buying momentum before the sell is here. The last buying momentum before the sell is here, this one, right? Price type here, look at this one. This one is a type here, this is a stop loss, and this is a target, right? So this is our next order flow entry module here. You will get most of the chances that in an order flow you will get an entry, but problem is here in an order flow you will get a very small risk reward compared to the order block. But in an order block is a problem. Order block you will miss so many entry and so many SL, but in an order flow you will get a execution is a high probability, but the risk reward will be decreased. Okay, so these are pros and cons in order flow and order block. It's depending on you that which one you are following, but as a starting I will suggest you start from the order flow. Order flow is a primary compared to the order block. Okay, so this one is our first example. Now again switch here in a 4-hour time frame to see exactly what happened here. In a 4-hour time frame, same thing happened here. Market push downside, break the previous low, and now what are you looking here? This our previous structure, high or low is here. The previous low, previous high is here, and again lower low is here, and before it this was our structure, something like this. Taking out the inducement, push downside. Again what are you looking here? We are looking here for the sell on inducement. You have to identify in this leg there is any kind of inducement available or not. No, in this case there is no inducement is here, only single leg move here, so we can use the entire the previous high as a inducement. Why this is an inducement? Because in this case there is no inducement. If market create any kind of inducement here and here, then we can mark. Okay, and after taking out the inducement, simply you have to wait for it to mitigate the unmitigated order flow and then sell. But market not create here any kind of inducement. Okay, order flow you can apply in higher time frame, in lower time frame, everywhere you can apply. It doesn't matter that you have to apply only higher time frame in a lower time frame. No, you can apply anywhere. It's depend on you. First of all, you have to identify the structure, identify your liquidity point which grab the liquidity and wait for mitigation, and then you have to switch here in a lower time frame to for the buy and sell. In that case you can follow the order flow and order block or anything you can follow, but main thing is order flow. Order flow is a primary compared to the other things. Okay, so same thing happen here. The previous highs are taken out, and once market taken out the previous high, then definitely what are you looking here? We are looking here for sell in this case, because this shadow grab the liquidity. Again same thing happen here, and this is a high probability. If you are looking for to identify where is our high probability POI, then you have to identify external liquidity sweep, which is like this. Okay, when market taken out the previous high or low, sweep the high or low, sweep the inducement, those area become high probability zone for the buy and sell. Same thing appear, this grab the liquidity, it means this is a strong zone for the sell. And now you have to switch here in a 15-minute time frame, because this is our 4-hour time frame. And after that what happened here? Same thing happened here. Market break the previous low is here, and when market break the previous low, then again what are you looking here? We are looking here for the sell till this low, like this. The previous low is a broken, create a break of structure. Again, we have to wait for it to take out the inducement. So where is the inducement in this case? Simply this is our first pullback here where we can sell here. But problem is here, in this case our wait there is no unmetered order flow, order block or anything is here. So in this case you can follow two things is here. First thing is here, this point grab the already liquidity is here, right? So simply if price grab the liquidity already, then in that case you don't need to wait for inducement before the sell. If market tap this one, then you can sell here like this one. This is our hidden supply zone is here, price type here, and then we can expect a downside move here. This is a 4-hour time frame, price mitigation, and wait for the 15-minute chalk flip, and then we can sell till this main low right here. Because just of it there is no unmetered order flow or order block or anything is here. You have to wait for it to mitigation and then we can sell, right? And also if market not create here any kind of chalk or flip, then price went up and then went down and create any inducement, and then you can sell till this low here. Because this inducement can be a sweep here. If price sweep here, then we can sell here after taking out the inducement, mitigation this order block, order flow, then you can sell at this point till this low, right? So this is a process to identifying the inducement, to identifying the liquidity, and how you can play in a lower time frame to following the order flow. Order flow you can apply in a higher time frame, in a lower time frame, everywhere you can trade. So I hope this video help you a lot to understand that how we can identify high probability zone for the buy and sell, and how we can trade in a lower time frame, in a 15-minute, in a 5-minute, and even 4-hour time frame. It depends on you that which time frame you are following, and you can trade based on order flow and order block. Order flow is a primary and order block is a secondary of the zone. So in this video, enough for the day. If you are new, subscribe our YouTube channel, join our free Telegram channel, link in description, go and check out, and I will see you in the next video. Happy trading.